Thinking about your pension? You'll want to hear this. The UK government might be about to shake things up, and it could affect millions of us, both in the public and private sectors. So, here's the scoop. The government, led by Chancellor Rachel Reeves, is reportedly considering a major change to how our pensions are taxed. The plan involves putting a cap on something called salary sacrifice. What is salary sacrifice? It's a popular way for people to boost their pension savings. You agree to give up a portion of your salary, and your employer puts that money directly into your pension before taxes are calculated. The big advantage here is that neither you nor your employer pays national insurance on that sacrificed amount. It's a win-win. You save more for retirement, and your employer saves on their tax bill. Currently, there's no limit on how much salary you can sacrifice this way. But the new proposal suggests capping this at just £2,000 per year. Anything you contribute above that £2,000 through salary sacrifice would be subject to national insurance payments. Now, the government believes this move could raise about £2 billion a year. On the surface, it looks like a way to fill the public coffers. But financial experts are sounding the alarm, warning that this could seriously backfire and create a whole host of unintended problems. Let's break down why this is causing such a stir. First, for individuals, this change means less money going into your pension pot. If your contributions are suddenly subject to national insurance, you're either going to see your take-home pay drop, or you'll have to reduce your pension contributions to compensate. Either way, it makes it harder to save for a comfortable retirement, but the really interesting part is the potential impact on the government itself, especially concerning public sector workers. Think about doctors, nurses, teachers, and other government employees. About 10% of them use salary sacrifice schemes to top up their pensions. Here's the catch-22 for the government. If they introduce this cap, employers, including the government as a massive employer, will have to pay more in national insurance contributions. Tom Selby from the pensions platform, AJ Bell, points out that any increased cost for public sector employers is ultimately paid for by us, the taxpayers. This could mean less money for public services or even higher taxes down the line to cover these new costs. The government faces a tricky dilemma. What do they do about public sector workers? According to Becky O'Connor from PensionBee, there are a few problematic scenarios. Option 1. They could exempt public sector workers from the cap. But this would create a huge sense of unfairness. It would make public sector pensions even more generous compared to private sector ones, creating a two-tier system where your retirement prospects heavily depend on where you work. Option 2. They apply the cap to everyone, including public sector workers. If they do this, one of two things might happen. Public sector employees could see their take-home pay shrink because they now have to pay national insurance on more of their pension contributions. This might make them less willing to contribute to their pensions. Alternatively, to avoid this, the government might have to step in and cover the shortfall in employees' contributions. And if that happens, the Treasury ends up with an unexpected new bill to pay. So, a plan designed to raise £2 billion could end up costing the government money instead. As financial planner Ian Cook from Quilter puts it, either public sector workers pay more, or the government needs to pick up the tab. It's a classic case of a policy that looks simple on paper but could have complex and costly ripple effects. It's a delicate balancing act. The government wants to raise money, but in doing so, they risk discouraging pension saving, increasing costs for businesses, creating a divide between public and private sector workers, and potentially even increasing their own spending. The Treasury has kept quiet, saying they don't comment on tax speculation before official announcements. But with the budget looming, this is definitely something to watch. Will the government push ahead with this plan, or will they listen to the experts and reconsider? The outcome will have a direct impact on our paychecks, our retirement plans, and the future of public services. What are your thoughts on this? Let me know in the comments below. And if you want to stay informed on financial news that affects you, make sure to subscribe and hit that notification bell. Thanks for watching.